Are you confused by indicators? Well, I will simplify it for you. In this video, I'll be going over the best Forex indicators for beginners. Just no nonsense. Alright, so let's start over here. We are in TradingView right now. This is my charting platform. Yeah, you can create a free account. So over here, I'm looking at the Euro USD chart. I'm looking at the daily time frame over here, and there are a few indicators that we are going to use. So we look for the exponential moving average, which is over here, moving average exponential. You can click on it a few times, or you can also go to one of my favorites, is this over here, 10 in one different moving averages. So then you use basically one indicator, and in that one indicator you can select 10 different moving averages. So over here I have selected it. So here we see the moving averages that I will use. Over here, the EMA, exponential moving average, the 50, the 200 and the 800. And another indicator that you will be using is the RSI, which stands for the relative strength index. So you click on that as well. So then you should see something like that, right? So we have this default setting 70 and the 30 level, and it's the 50. Okay, so basically it's quite simple. When price is above these exponential moving averages, we are looking for buy opportunities because we're in an uptrend. If price is below these moving averages, we're looking for sell opportunities. So then we only take sell trades, right? Quite simple. So let's see over here. What do? We use the moving averages to identify trends. So the 50 is an exponential moving average that is being used by a lot of traders. The same applies to the 200, and the 800 is not that popular, but I use it as well to identify a trend on the higher time frame. So again, prices above these moving averages, we are in uptrend. Prices below the moving averages, we are in a downtrend. And another indicator, as mentioned, is the RSI. So the RSI is not really specific to identify a trend, but it's more like if it's overbought or if it's oversold. So it's an oscillator, and the RSI works much better in ranging periods, and it's a really good indicator for mean reversion strategies. So what do I mean with that? Mean reversion is basically that it is over here. You can see it. It's a nice example. It has trended to the upside. It's only bullish, but at one moment it always has to go down to a specific average, and in this case it's the 50. So it can't go up every single day. It has to come down to a specific target, a specific area, which is in this case the 50 level, but we also see it over here. Then it comes down to the 200 level, right? So price not always goes into a specific direction 100% of the time. It always has to come down to a specific average. So that's why we use the RSI to find out if, let's say, it's overbought, that it always has to come down to a specific average. So as we can see over here, it is overbought, but then eventually it comes down to a specific, in this case the 50 level, 50 EMA. So we use the exponential moving averages to identify trends, and we use the RSI for ranging periods and mean reversion strategies. But there's a way to combine these indicators. So what you can do, it's basically one of my favorite strategies. What you can do first, you have to determine the trend. So when price is above the moving averages, then we only look for buy opportunities. What you do once you have identified that, so in this case, we see it goes to the upside. Over here it's above the moving averages. But then what we do, we go down, we look at the RSI, and we look for bottoms. And in this case, we look for double bottoms. So this is a nice double bottom. Over here, we have a low and we have another low. So we see a double bottom, right? It's quite straightforward. It goes to the upside, went down, we see a bottom, and over here it comes basically to the same level. But this is also a bottom. So what we do, we go down over here and we look at the RSI, and we see that this bottom is the same as here, but when we look over here to this bottom, we go down again and we see that this bottom of the RSI is higher than this bottom, while over here, maybe I can show it. Over here we see that this low is here, and we see that this low is lower than this low, right? We see a wick to the downside that basically many people who took a buy trade and they put a stop loss about here just below this low, right? They got all taken out, but okay, that's something for another video. We see that this low is over here positioned. We see this low on the RSI is here. We see over here a low on the chart platform, and we see down below that this is formed a low as well, but we see that this is higher than this low. So there's a divergence. Over here we see a low, but this one is lower than this one, and over here we see that this low is higher than this one. So there's a divergence. It does not work all the time, because I can't believe that there is one strategy that works 100% of the time, but it's quite a good strategy. So once you have identified this pattern, what you do, you wait for an engulfing candle. For example, over here we see a nice engulfing candle. This also getting nice engulfing candle, but just make sure that you put your stop loss a little bit below the latest low, not just close to it, but give it a little bit more of room. But over here we see another big candle with a big body, and from that moment, once you have identified this pattern, you can take a buy. So this was a nice buy. We see that it goes to the upside, which is a nice profit. But you can also wait for a cross on the 50 level of the RSI. So once it has crossed the 50 level RSI, which is also here, we take a buy, right? So in that way, you can basically use two indicators, and the only thing you do is identify a uptrend or a downtrend. And from that moment, you just look at the RSI. In this case, we are looking at the daily time frame, because the indicators, in my opinion, they work best on higher time frames. If you try this strategy on a 1 minute time frame, of course you can have a few winners, of course, but it's more reliable on a daily time frame. It's also more smooth. But okay, over here we see a low, right? Here we see another low, but we go down to the RSI. We see that this low corresponds with this low, and this low is same as this. So what do? This is clearly below that one. But is that one clearly below the, let me see, is it clearly below? No, we even see that this low is higher than this low, right, on the RSI level. So we have a divergence again. And yeah, you, as I mentioned, you can wait for big body candles, bullish big body candles, engulfing candles, whatever you prefer. But we see a nice body candle over here, we see it over here, and if we wait for a nice cross of the 50 level, which is about here on this candle, we can take a buy. Let me grab the long position tool. This is a nice trade. Let's say we can put our stop loss here or here if you are more conservative, and then you can aim, let's say you aim for the latest resistance level, which is here, right? So this was resistance, support, and over here we see support, resistance, and then we can aim for a nice resistance, which is a 1 to 1.17 risk reward ratio trade, and it eventually goes even higher to a 1 to 1.5 ish risk reward ratio trade, which is good. So that is basically if I have to use two indicators, these are the indicators that I would definitely prefer: the exponential moving averages and the RSI to identify divergences, because you can't use the RSI for trending moves, right? Over here we see, for example, that it is in an uptrend. We see it's overbought, then we can just simply sell because we see that it keeps even higher, right? So if you use the RSI in a trend, just like everyone else, basically, that you sell when it's in overbought situation and you buy when it is in a oversold situation, then you simply do not make a lot of money. There are many losses, and yeah, it will basically discourage you. So that's not something that you want. But if you combine this strategy, so yeah, you combine the RSI with the exponential moving averages and you use it this way, and you will see that it will really work. As mentioned, it's not a 100% guaranteed trading strategy. Of course it isn't. I can't do that. I can't guarantee 100% win rate or a lot of money, but it is definitely something that is really useful. Over here we see another trade. Of course the price is not really below the 800, but it is below the 50 and the 200 exponential moving average. So what do? We look at a top and another top. Over here we see that it is similar, right? So this top is same as this top, same level. But over here we look down below to the RSI and we see that this is a high over here, but we also see that this high is higher than this high. Well, this is not the case, right? Over here we see it similar. So again, we have a divergent situation. What do? We wait for a bearish engulfing candle, which is here. It's a nice bearish engulfing candle with a nice body. But we can also wait. So yeah, of course you can enter here, which is really great. Let me show you over here. I grab it, put it a few pips above the latest high, and of course I aim for a support level, which is about here or here. It doesn't really matter that much. This one is 1 to 2.2 risk reward ratio trade. This is about a 1 to 1.7 risk reward ratio trade, which is really good. But you can also wait, of course, when it crosses the 50 level, which is a little bit more safe, which is about here. And yeah, the same applies. You can put your stop loss to the 200 exponential moving average for if you want. And we see price really nicely moves to the downside. So yeah, I would say just check this out, this trading strategy. It's really useful. Play around with it. Of course, here we see another scenario. This is higher than this one. This is about equal, right? So it's equal. I believe this one is even higher, but it's not that much higher, right? So it's about equal. But this was higher than this. And again, we have a divergent situation. We wait for a nice cross on the 50 level and we take a sell from this moment all the way down. So yeah, that's basically a nice trading strategy that you can use. Again, prices below all the exponential moving averages. We look at the RSI for divergence moves and we just simply take the trade. We pull the trigger. Yeah, that's it. So maybe I can show you another example. Over here we have a high, right? Yeah, this is identified as a high. Over here we have another high, but what do we see? This high over here, right? RSI high is much higher than this high of the RSI. Yeah, this high over here. So we see clear downtrend. I mean a divergence and also a downtrend. So this is clearly, this is lower than this one, but this over here is higher than this one. So we take a buy. Simple trading. Exit, yeah, it's something that you have to figure out yourself. You can play around with when it's oversold, for example, that then you exit the trade, or you do a simple risk reward ratio 1 to 2, for example. It's completely up to you. And again, entry is also really simple. You just wait for a bearish or bullish engulfing candle, or you can yeah, just enter the trade when it has crossed the 50 RSI level. Really simple. So yeah, if you are confused by indicators, or if you were confused by indicators, I hope this would not be the case anymore. You do not need a lot of indicators to become profitable. This is just an example that I showed you guys. Use the exponential moving average to identify trends and use the RSI for divergence moves. And yeah, just let me know down below in the comment section if you want another video that is more about divergence trading. So if you like this video, give it a thumbs up, subscribe, and I see you in the next video.